Welcome to It's the Economy. Post the shockingly high tariff announcements, many brokerages have lowered growth rates of the global economy as well as most individual countries as well. How much may India's growth be impacted, and how will that alter the Reserve Bank's approach to interest rates, to liquidity and to its stance? I have with me veteran economist, veteran India watcher actually, Chetan Ahya, the chief economist for Asia for Morgan Stanley. Chetan, good morning and thank you very much indeed for your time. Can you begin by telling us what's the Morgan Stanley view of Asian growth and global growth as well? Have you all marked anything down?
So, Latha, look, we have not made any adjustment as of now, but what we have been highlighting is that when you're thinking about regions' growth, you should expect downside of more than 1 percentage point. That is the number that we had seen in 2018-19 as damage to regions' growth. So to the extent to which the tariffs situation is far more worse than what we had seen in 2018-19, we are highlighting that the region's growth will slow by more than 1 percentage points in this cycle.
Okay. Now, how much should we be prepared for India? Your note clearly says that India is one of the least affected countries, but impact would still be there, isn't it? Any ballpark numbers?
Yeah, so India will see we are saying that India could see a 40 to 50 basis points downside in its GDP growth. So, yeah, I think India is not going to be unscathed. And the main exposure for India would be from the fact that India's exports are going to be affected across the world. It's not just about your exports to the US that gets affected, because remember that this is a global slowdown. This is going to cause a global capex slowdown. And then the aggregate trade effect is more important than the bilateral trade effect with the US.
Okay. Yeah, I agree with you. There is going to be a huge reset of how trade is done. Will there be a general migration of value or, output to the United States? I mean, even if it is not to the extent that the tariffs suggest, will the US see, much better growth next year, for instance?
Well, I think it's going to be complicated. It will take time. Certainly, as well, one of the approaches that the administration is trying to do is to have U.S. trade deficit reduced with its trade partner by way of trade partners buying more of U.S. goods. So let's say that if India wants to buy more oil and gas from the U.S., we sort of spoke to our team internally in the US, and the US will take some time to increase its production capacity for oil and gas. So, yeah, I mean, there will be some onshoring of manufacturing, and there will be also increase in the existing industries in which the US has the capability. But these things will take some time because it will not be possible to do it immediately. For oil and gas, our analysts told us that they will take about 18 to 24 months time to augment their production, to give more oil and gas to different trade partners in the region.
Oh, now, that's a new and very important factor that you're bringing in, because, if that is the case for oil and gas, then it is going to take much more time to ramp up other products if they insist that every country should buy more US goods. Let me concentrate first on the Reserve Bank. How will the Reserve Bank approach? I mean, if it's not 6.7%, what do you expect them to say will be the India growth forecast? And therefore, how will they approach interest rates?
I think it will also be difficult for Reserve Bank to give a point forecast. I think they may also operate in the way that we are operating right now, highlighting the downside risk. Maybe they do bring some downside into the numbers, but my guess would be that they will probably also approach it the same way as we guys are approaching it, that you highlight the risks and then see eventually what happens and then actually mark down their numbers. But I would reckon a 40 to 60 basis point downside, just as we are highlighting, is more likely from RBI as well.
Okay. And therefore, will it be a more than expected dovish policy? Can they go to 50 bips rate cut, or will it be rate cut plus a stance change?
Yeah, so we are saying that there will be a rate cut plus stance change. We are not building in 50, we are building in a 25 bips cut. That's the forecast that our India economist Upasana Chachra is highlighting.
Okay. What about liquidity? Are you expecting to hear more? If you look at the OIS rates in India, they are factoring in a 50 bips cut, not because the Reserve Bank will cut, but because they expect liquidity to be adequate and therefore the call rate going towards 6%. Are you therefore factoring in far softer, much more dovish policy in terms of liquidity?
I think that should happen, and that should have happened actually independently of this tariff risk weighing on growth outlook. Because what we have seen in India is that while we have done one policy rate cut, if you look at the banks' 3-month CD rates and just the effective deposit rates in the system, they have not been brought down.
Yes.
So in terms of transmission of that rate cut that RBI has done, it's not effectively there. And so they have to ensure that there is enough liquidity. If you have liquidity deficit and if you have a volatile interbank rate, it becomes very difficult for banks to plan their liabilities and then accordingly cut deposit rate. So yeah, we were expecting that before the tariff risks emerged, and then the tariff risk has even made it more sure that they will do that.
Okay. Now, can you tell us how Asia will reset? Are you expecting lower growth in China? How much would you expect will be the cut in Vietnam, for instance? Your report points out that their exposure to the US is more than 26% of their GDP. So, can you give us an idea of whether Asia sees a really steep cut and where will the cuts come?
So as I mentioned, right now we are operating with growth rates downside of more than 1%, and more than 1% is quite a lot because, when you're talking about regions' average growth rate at around 4.5%, this is quite a meaningful cut that you would see if these tariffs are going to persist. I think the best way to look at it would be in terms of relative basis, just look at exports to GDP, because as I highlighted earlier, the biggest issue that you're going to face is overall exports slow down for the region. It doesn't matter how much you're exporting to the US, but to the extent to which this tariff uncertainty is going to weigh on global capex, therefore global trade, you want to be looking at countries or economies which are having higher exports to GDP. Those will be more hit compared to the ones which are having lower exports to GDP. So India is on the lower end of the spectrum. India's exports to goods exports to GDP is the lowest at 12%. And then at the high end, you have economies like Malaysia, Korea, Taiwan, other ones which are highly exposed. China is somewhere in between. Its exports to GDP is about 20%. So China will be less affected than other more export-oriented economies in the region.
Okay. I wish I'd put that table as well. We are running your exports as a percentage of exports to the US as a percentage of GDP. But yes, as you point out, your exports anywhere could be impacted because the world itself may deflate a bit. Let me come to inflation on that point. Are you expecting the RBI to lower its inflation forecast of 4.2% because, people will be pushing their goods elsewhere, what they can't sell to the US?
Yeah, I think they should because, this is going to be deflationary for all of Asia and all exporters for two reasons. Number one is you will see that weakness in domestic capacity utilization because of your exports getting affected. And secondly is that there is going to be so much excess capacity with the trade partners. So if you think of it like China, that will weigh on international prices, and therefore you're going to get this double whammy as far as inflation outlook is concerned. So, and already India's inflation is below 4%. So yeah, I think tariffs are deflationary, and that will be reflected in India's inflation outlook as well.
Okay. Very quickly, a last question. There are some people in India who take relief from the fact that our tariffs are lower than that of Vietnam, Bangladesh, China, etc. People with whom we compete. And therefore, we should do better in terms of exports to the US. Would you counter that?
No, I think it's a fair point. But look, I think Lata, I think the most important point I remember from 2018, 19, and that was also the time when a lot of people were saying that China is being able to reroute it from Vietnam and other countries, Mexico. What in reality what happened is that China's exports slowed, and guess what? The other countries which did not have tariffs and did not have to reroute from Vietnam, their exports slowed even more than
Oh.
China. So I think it's going to be possible in the medium term that India will benefit, but in the near term, what you will see is everybody's exports will get affected because the aggregate trade effect is going to be overwhelming compared to individual countries' bilateral situation with the US.
Okay. Well, thank you very much, Chetan, for bringing that level of understanding to how we have to look at our own trade and our own growth. We have to wrap up for want of time, but let me take a rain check from you on discussing, how the global reset will impact both in the near term and in the medium term. That discussion for another day. For the moment, it's a wrap on Bazaar Chartbusters coming up after break.